What's going on, everybody? It is your boy Stas here. Welcome back to another video. Hope everybody's having a fantastic Sunday night, had a fantastic weekend, and I hope everybody out there is ready to dominate this week in the stock market, just like the Eagles dominated the 49ers and how they're getting ready to dominate the next team, whoever they face. Right now, the Chiefs and the Bengals are playing. I'm going to watch the rest of that game after I finish this video, and if you guys didn't know, yeah, I'm an Eagles fan, and no, this is not a Wentz jersey. It's an A.J. Brown jersey, baby. Let's go. I'm freaking pumped. We have a lot to talk about in this video, guys. 10 stocks that I'm looking at right now, and in general, what I'm looking at in the markets for this week. We have a lot to break down because this week is a jam-packed week. Let me just read to you guys the companies that are reporting earnings. It's going to blow your socks off, and we're not going to talk about all these in this video because this video would be like an hour and a half long. Maybe I'll do a part 2 to this. We'll see, but we have on Monday, we have Sofi reporting earnings. On Tuesday, we have AMD, Snapchat, ExxonMobil, UPS, GM, Pfizer, Caterpillar, McDonald's, Spotify, MRO. We also have Amgen, EA, and those are all on Tuesday, guys. And mind you, there's way more that I'm not mentioning. And then on Wednesday, we have Meta, Waste Management, Altria, Peloton. Yeah, Peloton, that's still a thing, guys. They're reporting on Wednesday, and we have Humana as well. Humana, however the heck you call that company, whatever. Then on Thursday is the big day that everybody's waiting for. We have Amazon, we have Apple, we have Google, we have Starbucks, we have Ford, and we also have Qualcomm. So there's literally, I just named like how many stocks, how many companies, 30, 40 companies. There's a lot of companies reporting earnings. And in this video, we're going to talk about 10 of them, break down the estimates. We're going to also break down, and by estimates, I mean revenue, EPS, and we're also on top of that going to break down the charts. As always, I love breaking down charts, and you guys know that. So right now, it's about, what time is it? 7:45 when I'm making this video, and the futures are down a little bit. Dow futures are down 0.1%, 0.15%. Same with the NASDAQ. The Russell futures are actually down 0.2%. Same with the S&P. It's almost down about 0.2%. And a little side note, you guys remember on Friday, don't forget this, I bought SQQQ right at the close. Once the markets closed, I actually bought some SQQQ, which essentially is a 3X bear ETF on the NASDAQ, right? So far, the futures are down, which is good, but obviously, guys, I'm not naive to the fact that this could flip-flop overnight. We've seen it do it all the time. For all we know, we could wake up and the markets could be green tomorrow. But, right now, futures are red, and I'm in SQQQ, so we'll see how that goes. Maybe I'll regret it. Like I said in my video on Friday, literally the first thing I said, I might regret this. And who knows? I actually might regret it. We'll see. But right now, futures are down. And overall, the stock market, if we're looking here at SPY and QQQ, it is definitely in the short term overbought. And we're also in the short term at a very big level of resistance. You guys can see here on QQQ, if I just clear the set and just zoom in and pretty much just draw a couple lines, you're going to see we're at a big level right now, which is at 295, roughly 300. And I've been talking about this. I mean, this is nothing new, guys. It's nothing new, but I think in the short term, ahead of these earnings from big tech, and I could be wrong, who knows, but before these earnings, I feel like we're due for a little pullback, and that's kind of why I'm in SQQQ, like I mentioned in my last video, which go check out that last video. We talk more about it. I'm in that. I think the title is, I'm shorting the stock market or something like that. Go watch that video. But yeah, in the short term, I feel like we're due for a little pullback, and then we might retest 295, maybe 300, and if 300 is able to break, we'll see. There could be an even bigger push there. We've talked about 315 on the channel. We've talked about, 330 eventually on QQQ. That's where this could be going. But, guys, we've been struggling for weeks, months, to be honest, at 295, 300. We got to see that break first. We're just not seeing it break quite yet. And on SPY, if I zoom in here and show you all, we're under a big level from the past couple months, right around 400, 405, 410. This is a sticking point. You guys can see here from back in November, December, earlier this month, we failed there multiple times. So, yeah, I mean, SPY, QQQ, they're overbought heading into this earnings week, and we're also heading into, we're not even heading into, we're at a big resistance right now. So, we'll see. I'm speculating. We do see we see a little bit of a pullback. I could be wrong, but that's what I'm speculating on. And of course, I'd love to know your thoughts in the comments down below, guys. So Yeah, I mean, a lot's going on. We have a lot going on. And actually, before we dive into these earnings, let me see if I could pull up the Forex Factory this website right here that essentially shows big events going on that we have to watch. Oops, I just butchered that. Wait a second, guys. Where is it? Here we go. Oops, sorry about that. There we go. Let me make my face a little bit smaller. So this is Forex Factory. No, they're not sponsoring the channel. It's just a website that I use, guys, and I'm sure a lot of you guys use it as well. It shows big events, economic events that are going on, not just in the U.S., but across the world, right? We have, Japan, Canada, Europe, whatever. But in this case, we're obviously looking for the events that have a big impact, which are, you guys see the yellow little folders here? They look like folders, but they're really not folders. You see the yellow, that means mild impact, mid impact, but red is a big impact that we have to watch. So on what day is this? On Tuesday, we have, let's say, for example, we have the Canadian GDP coming out. Then on Tuesday at 10 a.m., we have consumer confidence for the U.S. Then if we come down a little bit more here on Wednesday, anything big for the U.S.? We have ADP non-farm employment change, which is big. We got to watch that. That essentially shows, if you click on this and zoom in a little bit or just scroll down, you'll see it. This measures the estimated change and the number of employed people during the previous month, excluding the farming industry and government. And the estimate is 168,000, and it looks like previously it was at 235,000. So that is coming down a good chunk there. Then if we come down a little bit more, we have the ISM manufacturing PMI and the JOLTS jobs opening. That is at 10 a.m. on Wednesday, the 1st of February. And if we come down a little bit more, of course, we have the FOMC statement. We have the federal funds rate and the FOMC press conference, which is on Wednesday as well. I hope you guys are ready for that, because that's going to be a high impact event, very high impact event, no doubt about it. And that's a little bit of my speculation as well, which in SQQQ, which it might not play out. I could get screwed on that, but I think we're due for a little pullback before potentially rallying later in the week. I'll say that for the 5th time of the video, right, guys? Let's see. If we come down a little bit more here, what else? On Thursday, we have preliminary unit labor costs, non-farm productivity. That's a lower impact event for the U.S. here. And that's pretty much it. Actually, wait a second. On Friday, we have, average hourly earnings. I want to see that. Looks like it's going to be 0.3%, and last month it was 0.3%. We also have the non-farm employment change, unemployment rate, and the ISM services PMI. So, I mean, on top of earnings, guys, there's a lot going on with the, just overall the economy. Things to watch out in terms of jobs, the average hourly earnings, the FOMC statement, interest rates, everything going on. There's a lot to look out for this week. So with that being said, guys, let's transition now to stocks. What stocks I'm looking at, which we named the entire list in the beginning of the video. There's a lot to watch out for, but we're going to narrow it down to 10. Starting off here with Sofi, which is, of course, ticker symbol SOFI. I love the companies, guys, that have the company name is essentially the ticker symbol, right? Sofi is a great example. AMD is a great example. It just makes it easier, right? and yeah, look at Sofi, guys. This thing has been breaking out the past couple weeks. Just a couple weeks ago, it was in the 4s. Now we're pushing above $6, which is great. And that was on, actually, wait a second. It closed under $6 on Friday, and then it looked like it popped. Yeah, it looks like it popped after the bell on Friday in the after-hour session, as you guys can see, now to about $6.20, which is great. So Sofi, and full disclosure, guys, I do not own Sofi. I've traded it before tons of times, not any time recently, to be honest. This was actually a while ago. I think the last time I traded Sofi, it was over $10, which you guys know that was a decent time, decently long ago. Let's just put it that way. But overall, it is above the moving averages. Now we're testing a multi-month high at about $6.20, $6.25. You guys see it right here. If I zoom in a little bit, you're going to see that. Boom, $6.25 and $6.50. Those are two very big levels. If we're looking at the charts here, we peaked at $6.50 on the 31st of October, it looks like, or was that the 1st of November? Either way. And then we peaked at, in the middle of November at about 620. So if we're able to see a break out of these points, SoFi could really start to take off. And who knows? I mean, it's very overbought. This is one that I wouldn't FOMO into personally. It's very overbought heading into these earnings. And who knows what they're going to do. I mean, the estimate for EPS is -9 cents. So, surprise, they're still going to be losing money, guys, on the quarter. And revenue is looking to be $425.88 million, which it's a growth company, up 52% year over year. That's pretty dang impressive. But I don't know. Is that going to be enough to propel the stock up? Because let's be honest, that's already priced in. We're going to have to see what guidance looks like. We're going to have to see what revenue comes in. And I'm not too convinced that we're breaking out yet. I mean, sure, we're doing great in the past couple of weeks, but in the grand scheme of things, in the overall downtrend, we're not breaking out of it yet. So in the short term, I'm going to set 2 alerts, one at 625, and then I'll put another one at 650. Let me do that now. Mark is at or above 650. And now on to the next, guys. We also have on Tuesday AMD. I mentioned AMD just a minute ago. This is a company that's also facing a very big level of resistance. We have big resistance at $80. You guys can see it here if I zoom in. You can clearly see that. We also have an inverse head and shoulders kind of that played out. And you could argue a cup and handle maybe, an ascending triangle as well. This could be a lot of different patterns, right? But overall, what we have to realize is technically it's got to break $80. If it doesn't break $80, we're probably going to fail back down low 70s, maybe under 70. But the second this thing takes 80 out, man, oh man, we could really start to get some runway on that, maybe towards 100, maybe even over $100. In due time, though. This is not going to happen, in my opinion, in a week, 2 weeks. But 80 is the big barrier here between us and really breaking out towards that $100 level. And we have earnings coming up on Tuesday with EPS expecting to be 67 cents on revenue of $5.5 billion, which would be up 14% year over year. So we've seen a lot of better quarters for AMD, of course, with growth being well over that. But in the environment we're in, hey, 14%, not too bad, guys. So I'm watching that to break potentially. It's not guaranteed. But if it breaks over 80, I'm watching it for a bigger move from that point. And we also have Snapchat. Let me pull it up. SNAP. Snapchat is one that's reporting on Tuesday as well. And this stock did pretty well on Friday, very well. I mean, 7% green day. It took the highs out from earlier last week. We also clearly can see we're at a multi-week high. And if I zoom in, honestly, we might be at a multi-month high. Actually, no, not yet. We're about to test the highs here from the beginning of December. If this breaks $11, we have a wide open gap towards 12. And you guys can clearly see that here on the 4-hour chart. So I might as well just set my alert. Let's do it. Where is it now? 1090. I'll put my alert at $11.10, and we'll see where it goes from that point. If it does break that again, 12's the next gap, maybe towards 12.50.13 after that. So Snap's looking to do 11 cents EPS on revenue of $1.3 billion, up 0.4% year over year, which, let's be honest, guys, that is disappointing. I mean, very disappointing. They're not growing at all. And that's what happens in the stock market, with different companies. When we have these crazy, and I don't remember what the growth was in 2019, 2021, but I could tell you it was not flat. But when we have these crazy periods of growth, it's not uncommon to follow, to see the years following that be negative or flat. I mean, it's just not uncommon. Things don't just grow forever. No matter what the hypesters on YouTube want to tell you, things don't grow forever. That's just not reality. And I'm not saying Snapchat is not going to grow again. It probably will at some point, that number. But for now, it's pretty flat, and that could be the case for quite some time. Who knows? But we'll see overall. And you guys know at the end of the day, it doesn't really matter. For the short term, what am I trying to get at? The short-term price movement of the stock doesn't really, rely on the fundamentals, if that makes any sense. You guys know that, right? So if Snapchat does pretty well, it could rip. It could rip a little bit. Or even if the earnings suck, it could still run, and it could be detached from the earnings report, if that makes any sense. The move, you'd think, if the earnings report was awful, it's going to go down, right? It doesn't necessarily work like that. The stock could go up and, it could be detached from that earnings report, which we've seen a lot. And you got to realize in the short term, guys, stocks can do whatever. They don't move based on fundamentals. Over the long term, though, that's different. Over the long term, typically companies with strong fundamentals, you get the best return on those. That makes sense. But in the short term, fundamentals, price action, it's a tricky thing, right? So Snapchat, keep your eyes on it. ExxonMobil is another one. You guys got to keep your eyes on that. This thing has been doing very well. Clearly, it's in an uptrend on the 4-hour chart. There's no denying that. They're looking to do EPS of $3.31 on revenue of $94.67 billion, up 11.4% year over year. So Exxon keeps on trucking along, guys. We had Chevron last week, and I think their stock, went down 4.4%. So Exxon's looking pretty interesting. Same with Chevron. I mean, Chevron, we talked about it. 190's got to break. We have an ascending triangle here. It's very obvious. If we break 190 on this bad boy, it could really start to take off from there. But right now, we're under 180. So we'll see how it goes. I just set my alert on Chevron. Going back to Exxon, we can see, this one's pretty much already breaking out. It took out 114 last week, it looks like. So this momentum could very well continue. We also have UPS next week or this week, which is one that's in a very tough spot, especially looking here at the charts. We're still technically in a downtrend. There's no denying that. But at the same time, we're making higher lows. You guys see that, right? And you could argue we have an inverse head and shoulders right here. If I zoom in a little bit and get the circle tool, there we go. Boom, left shoulder. We got the head right here. And then we got the right shoulder. That's what we're working with right now, heading into these earnings on Tuesday, right, where they're looking to do $3.59 EPS on revenue of $28 billion, up 1% roughly year over year. So pretty flat there for UPS. This is what we're working with. If we do get a decent report, let's say we break out of the highs here from the past couple weeks, right around 183. I'll set my alert there now. You guys can see that's a big level of resistance. We break out of there, we have a wide open gap. 190, maybe even higher. That's where we could be working. That's where the stock could be going, right? So UPS, watch out for it. It's not my favorite, but it's not looking that bad, especially if it breaks $183. So before we talk about the next stock, if you guys have not gotten your free stocks from Moomoo yet, use that link down below. Or go to stocksurfest.com/Moomoo, of course. Deposit at least $100, and you could get up to 15, not 2,000 stocks, up to 15 stocks, each up to $2,000. I always screw this up, but either way, guys, all the details are linked down below for Moomoo, and you could also, on top of that, get up to 12 fractional shares from Webull with any amount deposited. And if you want some more stuff, guys, 50% off your first year of Seeking Alpha. That's also linked down below. Check all the links down below, guys. All of those do help out the channel. And as always, I appreciate each and every one of you watching the videos. You guys are awesome. So the next stock on the list is Meta. Let's pull it up. Meta's reporting on Wednesday, and this stock, my gosh, it has been on fire. This thing was $88 a couple months ago, and now it's pretty much It's almost at a double up. It is up 75% in the past 82 days, which is insane. And we can see it's pushing 150s now. It's in the 150s already. And to be honest, it's pretty overbought, which if earnings drop the ball a little bit, I can easily see Meta sell off on this, with this setup here. But we'll see. I don't know. I mean, we saw Tesla go up 10% one day, then 10% up the next. That could happen here with Meta as well. It is that type of stock, but all I'm saying is it's a little overbought, but who knows? We'll see if the dust settles in the 140s. If you guys take a look here, 140s was resistance before the last plunge after the last earnings report, which you guys can see that was in October. That was awful. So 140s probably should hold that support. But if that were to break, we're probably going to start making a move down to the 128, 130, 32 range, right around the 180 SMA here on the 4-hour chart. So Meta's looking to do EPS of $221 on revenue of $31.49 billion, which would be down 7% almost year over year. So, of course, Meta's profitable. They're going to be profitable forever. Well, I can't say that. But I can't see a world where Meta's not profitable. But Revenue's down. Like I said with Snap, a lot of these companies, they grow. At some point, they're going to be flat or they're going to start declining a little bit. But if you pull back, guys, and you might be freaking out, oh my God, they're declining revenue. Holy crap, it's over. But if you just take the chart and you zoom out and you look at the revenue growth for the last 10 years, 15, 20 years, well, Facebook hasn't been around that long. But if you just look at the revenue growth, guys, it's still up. I mean, this is literally what it's going to look like. It's going up, and then it's going down a little bit, but then it's going to rocket back up again at some point. They're going to start growing revenue, not at 40% clips or 50% clips. That's not what I'm saying. But Facebook will get back to growing revenues 10%, 5%, 15%. Who knows, right? That's at least in my opinion at some point. So, yeah, Meta's one that we're watching. Of course, I have a position in Meta. I'm going to be watching it this week. Also, Amazon, let's pull it up. AMZN's the ticker, if you didn't know that. Amazon's been doing very well the past couple of weeks. On Friday, it went up 3%, cracked over $100 a share, which is great. And if we zoom in a little bit here, we're going to see an inverse head and shoulders. You guys could probably spot that, right? Clear as day, inverse head and shoulders on Amazon. That could have more runway. There could be more upside, especially, let me show you guys this resistance here, especially if this could break out of 103 to 104, right? 103, that's where we're at now. That's where we failed back in the middle and beginning of November, end of October. That's the sticking point. That's what I'm watching heading into this week. I'll set my alert at 105. We'll put that a little bit above the resistance so we really get the breakout. Maybe it makes a move towards 115 from that point. So Amazon's looking to do 17 cents EPS on revenue, let's see here, of $145 billion, guys. That would be up almost 6%. Cheers to that. $145 billion. Could you imagine if you told Bezos that when he was selling books in the 90s, late 90s, that in 20 years, you're going to be making $145 billion top line? That is just unbelievable stuff, guys. So I'm going to take a sip of water to that. Man, I needed that. So what's the next one here, guys? And again, watch Amazon at 105. Next one is Apple. Let's pull up Apple. We have Apple on Thursday, and mind you, Amazon's on Thursday. Meta's on Wednesday. I'm not sure if I mentioned that. But yeah, Apple is one that we're looking at here. It's all these are pretty overbought, guys. Overbought heading into earnings, which makes me a little bit nervous. I'm not gonna lie. But it's heading into a big resistance here on the 4-hour chart. We're also still under the 150s, which you guys can see 150s is where we failed in the end of October, November, heading into December. You guys can see that clear as day right here, right? So Apple's got a big, a sticking point ahead of it. But with earnings and it being Apple, anything is possible, right? They're looking to do EPS of $1.94 on revenue of $121 billion, which would be down roughly 1.8% year over year. So another down move here for revenue in a big tech company. Again, Amazon's looking to decline. Or actually, no, Amazon's up, rather. Meta's looking to decline, though. And again, with Snapchat, we talked about that earlier. It's not looking that great. Snapchat's more flat. But who knows? That could come in negative as well. We don't know yet. Again, these are all estimates. Who knows what the numbers are going to be, guys? These are just simply estimates. So Apple, keep your eyes on it in the mid-hundreds, 150, 55. That's going to be a big point for Apple. And, of course, the big dog, Google, my biggest individual stock holding. Google is at a big point here, 102, 102.50. That's a big level of resistance, guys. We failed at that point time and time again since September, pretty much. End of September, early October, time and time again, we failed at that point. You guys can see it here. So if Google could break out of there, if we're just looking at the technicals, this could really start to make a move. You can make a case for a move back to the 110s, honestly. You could definitely do that, depending on how these earnings are coming out or how they're going to be on Thursday. They're looking to do $1.21 EPS on revenue of $76 billion, which would be up 1%. So nothing crazy, but up 1% on the year over year. Not too bad. So it looks like the inverse head and shoulders already played out here. We kind of have a cup and handle as well. You could argue that. Let's see if we take out 102.50 on Google. And the last stock for the video, guys, we're 24 minutes in. It's a pretty long video. If you stuck till the end, drop me a money emoji. Say stuck till the end. I really would love to know. And let me know where you're watching this video from. Let me know what city, if you're in the U.S. or if you're abroad, what country you're watching this video from. Let me know in the comments down below. So the last one is probably some of your favorite, some of you watching, your favorite products here. It's Starbucks. You guys probably love your Starbucks. In fact, I actually had a Starbucks today. We went to Barnes & Noble's before the Eagles game. You know, we read a little bit, had a Starbucks. I forget what I got. Some pistachio cold brew. Unbelievable. And it's funny because when I was a kid, they used to call me Pistachio because my full name is Anastasios Stas. Anastasios Stas. You guys get that? You know, my best friend when we were like 5 gave me that name Stas, and it's stuck ever since. But in school, they'd call me Pistachio because the teacher could never say my name. And who could say my name? Nobody could say my name. That's why everyone started calling me Stas. Well, my best friend came up with the name. And I was like, all right, we'll run with it, Stas. And then I was, you know, ever since, you know, 4th grade, or even before that, geez, like 1st grade, I'm like, call me Stas, Stas, and that stuck. But when the teacher would always be like, she'd be like, Anastasios, or she couldn't say my name. She'd be like, Anastasio, and people would just call me Pistachio because of that. But either way, I don't know how we got there. But yeah, I got a pistachio cold brew at Starbucks today, guys, which is funny, you know. So if you call me Pistachio, that's what they used to call me, and it always makes me laugh thinking about that. But yes, Starbucks. Now I'm choking, guys. Holy crap. Starbucks, they're this week as well. They're on Thursday, right? Yeah, they're looking to do 77 cents of EPS on revenue of $8.76 billion, up 8.9% year over year. That is not too bad. So they're actually looking to grow. Not too shabby there for Starbucks. But the thing is, that makes me, you know, not want to FOMO into it. And I never buy before earnings anyway, guys. That's like a cardinal rule. Or what is that even a saying? Is it cardinal sin or cardinal whatever? Cardinal. It's a principle, right? For me, I do not gamble on stocks before earnings, and I would definitely not want to do it with this one because it's up like 70%, 60%, a ton, 55% in the past couple of months. I don't know what it's gonna do. You know, I don't know how the stock's going to react. Obviously, you know, it's up a ton in just the past couple weeks heading into the report. So I'm not going to FOMO into it, of course. But if we get a pullback after earnings, you know, this could be one worth looking at. So with that being said, guys, we're 27 minutes in. I haven't made an almost 30-minute video in a while. But with that being said, guys, I'm going to get back to watching the NFL game. I don't even know what the score is right now. The Bengals-Chiefs. I'm going to go check that game out, watch the second half, and of course, go Eagles. Crazy. This is the 3rd Super Bowl. I literally remember in 2004 watching that game against the Patriots. Then we came back in 2018, beat Tom Brady. That was freaking insane. Now we're going back again in 2023. What a time to be alive, guys. So if you enjoyed the video, hit the like button, make sure to subscribe, and of course, get all the free stocks, use all those links down below, guys. I appreciate you all so much. You're awesome. I'll catch you in the next one. Peace out.